The world is going through changes. Changes happening at a speed that we have never seen before. This is leading to disruption, chaos, panic, fear, hysteria, and a turbulent economy and marketplace. How do you protect your wealth in a turbulent world? How do you invest for cash flow in alternative assets to escape the rat race in times of uncertainty? How do you decentralize yourself, your family, your community, your business, and your investments to become sovereign and escape the matrix? If you are looking for strategies, tactics, and techniques to escape the rat race and matrix, you are in the right place. My name is MC Lobsher, and this is Cashflow Ninja. This is Cashflow Ninja. I'm MC Lobsher. Thank you so much for joining me and spending your most valuable resource, your time, once again with me on the show. Everything Cashflow Ninja is at cashflowninja.com. Cashflowninja.com. We've got over 1,000 podcasts. We've got 4 books. We have reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to sign up for the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. I've got a fantastic show for you today. I'm joined by Avery Carl from the Short Term Shop. Avery, it's great to see you.
Thank you so much for having me.
Yeah, so for my listeners and my viewers that's not familiar with you and what you do, could you please share a little bit about your background and journey with us?
Yeah. So my name is Avery Carl. I'm a real estate investor. I have about 225 doors currently across the U.S. And I started on a $37,000 a year salary, and I started with short-term rentals. So buying vacation rentals in the Smoky Mountains specifically. And over the course of time, over the past 10 years, have built the largest short-term rental specific real estate brokerage / team. We're brokered by EXP in the country. We've got offices in 20 markets where we help people buy vacation rentals, teach them how to manage them the exact same way that we do it, so that they can also build, generational wealth through real estate investing.
So I'm excited about this topic about short-term rentals because there's so much information going on, a lot of pros, a lot of cons, and a lot of confusion. So I think let's start there. Obviously, things have changed since 2020. 2020 was like the year that travel habits changed, right? Where people, instead of traveling down for a vacation to the Caribbean, they're now looking more to a place where they can drive, water, whether it be ocean, lakes, mountains, that kind of stuff. But can you share, and just from what you're seeing on the ground, how it's changed since then? What is happening currently? And then also, if you could speak to and just give us an update in the markets that you're in. What are you seeing? Because there's a lot of negative information regarding short-term rentals. And then you look at the other side and there's overly optimistic information about it. What's your view?
So I think that in the past few years, the short-term rental market has gone through a much needed stabilization. So I've been investing in short-term rentals since 2015. So that's well before COVID. And, there's a lot of Airbnb bust people out there that only looked at what short-term rentals did in 2020 versus, what they've done since then. And what they're not looking at is zooming out and seeing what they were doing before 2020. So, let's take one of my 2 bedrooms, for example. I got a 2-bedroom property that I bought in 2015. In 2020, it did about $85,000 a year. Last year was the lowest year since 2020. It did $77,000. This year, it's on track to do $81,000. So yes, it did drop between 2020 and 2023. But if you zoom out and look at 2015, 16 on up to 2019, we were really happy to get 60 grand back then a year. So while a lot of people are like, oh my God, it's a bust, it's actually just a blip. It's still, as real estate does, trending upward, but there are those ups and downs, those peaks and valleys along the way. So it's still trending upward, but we have had a little bit of a stabilization. I think a lot of people make the mistake of thinking that short-term rentals are a new asset class, which in some ways they are, but oh, I had an eyelash just fall out of my eyeball while I'm talking. In some ways they are, but not really. So the vacation markets that I invest in, which I'd like to clarify, I only buy vacation rentals in vacation markets that are either going to be somebody's second home or a vacation rental, no matter what. I'm not going into your grandmother's neighborhood in Indianapolis and buying houses that people would have bought to live in and taking housing inventory away. Even though that argument is a complete farce, I do like to clarify that I only buy vacation rentals, and that's what we teach. But vacation rentals have been around since the 1600s. I believe King Louis the 13th had a hunting estate that he rented out as a vacation rental. But in the U.S., the Great Smoky Mountains, where I have a lot of them, been around since the 60s. Emerald Coast of Florida, so Destin, Panama City area, 38. They've been around since the 30s or even before. So the only thing that's changed, like all of these markets are areas where pretty much all of the real estate has been vacation rentals or vacation homes since forever. What's changed is the ability for us to manage them ourselves through the use of Airbnb and Vrbo. So Vrbo's actually been around since 97, but only when Airbnb came around were we really able to kind of take control of this asset class as investors and turn it into, something that's really lucrative. So what I mean by that is, like, back in 2015, when we first started investing in them, the average property manager split was 40% of your gross, because there was, in their mind, and before Airbnb, you had to use them or else your property's not going to get rented. If you don't want to rent it, fine, if it's a vacation home, whatever. But if you want to rent it, you had to put it with one of those local property managers who had a website. And then as Airbnb became more popular, it became much easier for people like myself to remote self-manage, keep that 40% so that we can go buy more properties. So anyway, very long-winded way of saying short-term rentals are not a new asset class. We did have a big bump in 2020 because travel changed, and the few years right before that was kind of the big run up of Airbnb being more accessible to us as investors, and not just like college kids renting their futons to each other. So it's kind of a perfect storm of a run up, but I think there is kind of like a much needed stabilization going on. I think we're no different than any other asset class. So that's been around for a long time, that's nice and stabilized, like apartment buildings, for example.
I like that view, because it just reminded me also how short-term thinking orientated everybody is in investing and in business. Because you make an excellent point. Everybody's thinking like 5 years. It's a bust. It's coming down, and you're like, no. Let's just zoom out a little bit, and let's take a big picture view of this. And if you compare it then over that timeline, like you said, from 2015 to where it's at right now, we just had that massive spike because of how our behaviors kind of changed for a period of time in 2020, right?
Right.
So it's interesting that, I talk about it all the time, how we always look at, collectively, we have the attention span of an ant, and we always look at like 12 months. And I'm like, a baby, it takes 9 months for a baby to go from conception to birth. Like, you're not going to become a millionaire and a multimillionaire in anything in like 12 months. So
Right.
you got to give it some time to materialize and play out, right?
Right.
So question for you. So in the current market for short-term rentals, and I'm glad that you shared your business model too, because I'm going to get there of just diving into that a little bit more. What are some of the challenges that you've seen, and why is it that some people have some success in this particular asset class in this niche, and why is it that there's been failures? Because, and by the way, this happens in every single asset class. So I'm asking, just in this one, what have you seen that works, and what have you seen that does not work at all and has led to a lot of failures?
So in this particular asset class, adaptability is really, really important. So what worked renting in a certain market 10 years ago does not work anymore. So for example, when I started buying 10 years ago, In the Smokies, a lot of properties had like green carpet still, a lot of, or like mauve carpet. I don't know why in the 90s people put that color carpet in places, but they did. And they would just leave them like that and rent them and it would be fine. Now you will not get rented if you look that dated. You know, you do have to have a bright, light, airy feeling property. And, you know, I think some people, they see a listing and they say, oh, I'm going to make more money than this person made on it just because I'm a better manager. And they leave the green carpet and they go try to rent it and they fail because they've not adapted to where the market is today. Same thing with pricing and making sure that you're up on your automation and pricing. So pricing is a really, really big one. You have to look at your pricing at the very least weekly. We look at ours every day, but if you just put, you know, one price for the weekends and one price for the weekdays for the rest of the year or for all year, you are probably not going to do well. So, you know, pricing is very dynamic. You have to be using a tool like Price Labs to look at the data and it prices your property based on the, you know, events that are going on in the market. When it sees hotel prices go up, it bumps yours up. So it's always paying attention to optimizing your pricing so you can get the most amount per night and not just saying like, oh, you know, I need to make $50 a night this month. I need to make $200 a night in the high season and leaving it like that. You really, really have to pay attention. So it really is a business. It's part real estate investing and it is part hospitality business. So a lot of people who are coming from the real estate investing sector, people who own apartment buildings or single family long terms that expect to just slap it up and call it a day until next year when the lease is up again. Those people will tend to fail. People who only look at the business side of it and don't look at the real estate side of it in terms of, you know, location. And it doesn't matter what a great host you are if you're not buying in the right location where the tourists are coming, then you're going to fail that way too. But I think the biggest reason that we see people fail is back in 2020 when interest rates were 2%, everybody was like, wait a minute, the payment on a beach house is how much? I can afford that. I'm going to buy this and then I'll just slap it on Airbnb, let it make money when I'm not using it. But they weren't looking at it as the business that it is. So that is the most common failure that I see is just people not treating it like a business.
My new book, Get Wealthy for Sure, the #1 financial strategy for business owners to multiply wealth predictably, just hit #1 on Amazon. So Get Wealthy for Sure is an Amazon #1 bestseller. In this book, you'll learn the wealth building secrets that the ultra rich have used for over 170 years. You'll learn how to create your own banking system using a dividend-paying whole life insurance policy, allowing you to finance your business growth, invest in lucrative opportunities, and build generational wealth, all tax-free and protected from market volatility. You'll also learn the proven strategies used by icons like Walt Disney, the Rockefellers, and top CEOs to grow their empires and get wealthy for sure. You'll learn how to build a team of expert financial professionals, implement tax-efficient strategies, and protect your assets from creditors. You'll also learn the power of thinking like the wealthy and aligning your capital for maximum impact so you can take control of your financial destiny. I also share a step-by-step aligned capital strategy that will guide you to a life of certainty, clarity, and predictability without falling victim to misinformation or settling for the status quo. If you want to get a free copy of my book, Get Wealthy for Sure, and only pay the shipping and handling, you could go to getwealthyforsure.com. That's getwealthyforsure.com. I always say that you got to run your real estate investments like a business. You're in the business of real estate, which means you have customers and clients, and you have to know them very, very well and know exactly who you are serving. Which leads to my next question. There's different tiers, obviously. I always share that there's 3 levels, kind of, you know, from your Walmart type of customer or client, your Target customer or client, or your Nordstrom customer or client, right? Your levels where they all sell, for example, shirts. They all make money selling a lot of shirts, but they sell to different people. and they sell different types of shirts. At the different levels in the market, in the short-term rental market, what are you seeing, for example, in the luxury kind of like level versus the middle and kind of like your more just your average regular type of property?
So it's hard to say because you don't have to have a super luxury property to do really, really well, to have what I call like a mega property. So you don't have to go buy a mansion to have a really great cash on cash return and great cash flow. So one bedroom properties in vacation markets. So this isn't going to work if you go into like Houston and buy a studio or one bedroom property where it's going to be competing with a lot of hotel rooms, which we can get into the hotel versus short-term rental thing in a minute. But
Yep.
In vacation markets, so like beach condos, mountain cabins, one bedrooms and studios have some of the highest cash on cash returns because they always make up less than 1% of the available rentals on the market. But sometimes you will have a higher percentage wise return on investment on these smaller ones than a big, huge mansion. So I want to make sure people understand you don't have to go buy a big luxury property to be successful. But with luxury properties where people are paying a lot more money, they do expect a higher level of service. Now, that doesn't mean like you're going in and cleaning the property every morning in between their, when they're out like a hotel, but they don't want to see scuff marks on the walls. They don't want to see, they don't want to show up and your cleaner forgot to clean. So you do have to make sure that no matter the luxury level of your property, that you're giving a luxury experience in order to be successful at this. And that sounds like very difficult, but with all the automation tools that we have now, with the property management tools, it really is very easy. So as long as you have a really good cleaner, then you're going to be in good shape in terms of what luxury level you buy, as long as it's in the right location and you are managing and communicating very well.
You mentioned the hotel versus short-term rentals, and kind of just a couple of insights that you want to share around that. Can you elaborate on that?
Yeah. So the media kind of creates, and people in general create this big, oh, hotels versus short-term rentals, and they're at odds with each other. But they're not. So there's a time and a place for hotels and a time and a place for a vacation rental. So for me, if I'm going to a conference or something, or going somewhere to a big city on business, I'm staying in a hotel. If I'm going to Las Vegas, I'm staying in a hotel. I want to be waited on. I want room service, all the things. But if I'm going somewhere with my family, like on vacation, if we're going to ski in Colorado or Utah, or if we're going to the beach somewhere, then I actually do want a vacation rental with a kitchen and a place where everyone can be together. Disney's a great example of this. So Disney's a place like when I'm going just with my little family, we're probably staying in on property Disney hotel. But if we add my sister's family and her kids, or maybe my parents into the mix, well, now we're moving off to a vacation rental because we all want to be together. So I don't think it's a hard and fast black and white either or. It's a time and place for each, and understanding which types of markets lend themselves to vacation rental investing, so that you're not in that situation of competing with a hotel.
Great points. For our new listeners and viewers, or for people that have been thinking about getting into the short-term rental business, where can you steer them to start? How do they identify a market currently right now? And then also, what are some of the things that go into analyzing properties in after they find a market?
Okay, so for finding a market, there's lots of lists online by the big property management companies or the big short-term rental data companies that say these are the 10 best places to invest in short-term rentals. Don't do that. A lot of them do not, before they print those things, they don't look at the regulations. So a lot of times they're recommending places where you actually can't do it legally. A lot of times they might only be looking at how much money they make versus the purchase price, which isn't always a good indicator. Typically, in any asset class, when you're looking at a market that across the board has really high cash flow numbers and really low purchase price numbers, it's usually because that market is not desirable for some reason. So it doesn't mean like, oh, it's dangerous. It just means that it's not growing. So if it's a metro market, it's usually like the Midwest, for example, usually cheaper because it's not growing, because there's not a lot of people moving there. There's not a lot of demand. In a vacation market, if the real estate's super cheap, it's usually because there's not as much tourism going there. It's not as desirable of a place for people to want to own real estate to vacation. So keep an eye on that. You want to be in the best location. And a lot of times the big lists online, they don't look at that. They just look at numbers. And there's just so much more. I always say, like, it's great that we need short-term rental data. We absolutely have to have it to be able to analyze. But at the end of the day, that's a guy behind a computer looking at a spreadsheet that's never been to the market that you're trying to invest in. So what you want to do, the best way to start is think of a market that maybe you've been to with your family, or maybe you went with your parents when you were a kid, where you went on vacation and you stayed in a condo or a beach house or a lake house instead of a hotel, somewhere that that you've been a tourist in. So you know what the tourists have come to expect and what they're looking for, because you are that demographic that goes there, and start there. And say, okay, well, I like going here. I know that short-term rentals are a big thing here because everybody that goes here stays in mountain cabins or what have you. Then call the county or the city, check the local regulations, make sure that it's allowed, because a lot of places that seem like might be a great place, like Breckenridge, Colorado, for example, actually is not a great place. They're very anti-independent short-term rental in Breckenridge. They want the ski resort company to own all those. So once you check the regulations, then you want to pull in those data companies that I mentioned, like AirDNA, All the Rooms, Rabu. Price Labs is my favorite for data. And look at, figure out what your budget is, and then look at how many bedrooms you can afford for your budget, and then look at this data and say, okay, well, this is how much a 3-bedroom makes. I can afford a 3-bedroom. Does it make sense for me to buy a 3-bedroom, or does it make sense for me to buy 2 1-bedrooms, and then start analyzing that way?
Gotcha. Yeah, because there's a lot of things that are dynamic right now, as you mentioned, too, with the regulatory environment being one of them. And then also from a business standpoint, looking at costs, right? So I would also, I would, for example, think about like Florida, which is fantastic if you have it right on the beach, but you have to be aware of insurance, costs and so forth, right?
Right. Right. And there's going to be something, one of those little gotchas in any market. So Florida, yes, we have hurricanes in Florida. You either have to be okay with that and just make sure you have good insurance, or if that's something that's going to keep you up at night, then let's go find another market, because real estate investing is supposed to help you sleep better. It's supposed to add an extra stream of income, not keep you up at night. So, there's a market for everybody. There's a price point for everybody. There's a type of market for everyone. So it's just a matter of keeping, grabbing that little end of that thread and finding where is the best place for you, rather than, just letting somebody on the internet or Google tell you what to do.
Yeah. And price it into your numbers too. If there's a sharp increase, for example, in insurance costs, run numbers based on that, so that when that happens, you already thought about it and you already worked that into your numbers, right?
Yeah. Yeah.
So there's a lot of different scenarios that you got to take a look at, and of course, look at worst case scenarios, look at best case scenarios, and so forth. What can you share about building a team? Because a lot of our listeners and viewers too, one of the freedoms obviously is time and location freedom too. So what can you share about building a team, and then also how you can operate a business like this from anywhere?
Yeah. So you can operate a business like this from anywhere with the use of a few property management software. So there's a lot of great ones out there. I personally use one called Hospitable. There's another great one called Hostfully. There's OwnerRez. There's another one that's really good that now the name is escaping me. Anyway, there's a lot of great property management softwares. And what those do is they pull all of your listings on all the different platforms like Airbnb and Vrbo into one dashboard, so you can make one set of edits, automate everything across all of the platforms. Also, they'll automate your cleaner schedule. So back when I started, we had to, at the beginning of every month, look at our Airbnb calendar, and I had to write out each day that there was a checkout and a check-in and send it to our cleaner to go do. Now that's all automated. If somebody books it, puts it right on her Google Calendar, and she goes. So lots of automated messaging. We have a VA who helps with a lot of our short-term rental management. So he's on there too, and he can just message people back. And it's really, really easy to kind of standardize your processes with these automation tools. And then in terms of your boots on the ground, just start with a good cleaner and a good handy person. You can usually find those. I like recommendations from other agents. If you buy a house with a short-term shop, we've got a whole list of everybody that you need in all the 20 markets that we work in that we'll give you. But those two people are who you need to start with, your cleaner and then a handyman to kind of, do all the little things. And then as you need bigger things, those two people will know those vendors like roofers or HVAC technicians, people like that. I like recommendations from other investors, but you kind of have to be careful now, especially on Facebook, because there is a Facebook group for investing in like almost every single city. But people have kind of discovered that, oh, if somebody asks for an HVAC company recommendation on there, well, the HVAC company and any vendor, X vendor, will have all their friends come comment like, hey, can you comment real quick and recommend me? So you'll get like a bunch of recommendations for one person, and a lot of times they're not real. So I always want to make sure to ask like, oh, hey, have you ever actually done a transaction with this real estate agent that you're recommending? Or do the big one nowadays, because everybody's in everybody's pocket, is what do you stand to gain financially by recommending this person to me? Because a lot of times they are getting paid in some way if the deal is closed, if it's a real estate agent or, some type of affiliate fee or something like that. So you want to make sure that you're only taking recommendations from other investors who've actually used this vendor for the thing that you need done.
If you've been watching the news headlines, you know that the world's top CEOs, biggest investors, family offices, ultra affluent, and political elite are all moving to cash. Why? They're building up their war chest to go buy assets at a significant discount in the coming months. They are warehousing their capital in vehicles that have stood the test of time for 170 years with institutions that have made good on their promises for 170 years. If you're interested to learn how to build your own banking system using the infinite banking concept, just like all of these parties, you can watch a presentation at yourownbankingsystem.com. That's yourownbankingsystem.com. A lot of our listeners and viewers might have a couple of properties already. What are some of the strategies you can share on how to scale a short-term rental portfolio?
For me, it's just like any other type of real estate investing portfolio. Even now, 200 something doors later, I've got apartment buildings, I've got single family long terms, I've got short terms. I don't spend any money that I make on real estate on anything other than buying more real estate. Now, when I decide I'm done scaling and maybe we want to pay some things off, maybe that will change. But especially when you're at the beginning, first, whatever strategies you employed to save for that first down payment, don't stop those just because you've now bought a property. Keep doing all of the strategies that you did to save enough for that down payment, and also take the extra cash flow that you're now making from this property. Now you've got a compound savings sort of. So you use these strategies to get to point B. Now keep using those strategies to get to point C and add in the income from that property. You will get to point C faster. I see a lot of people who stop the saving when they get to property 1 to point B, and then just try to use that cash flow and forget about like, oh, well, I saved enough for one down payment. I can just continue saving, add in this cash flow from this, and get there faster. I think a lot of people, once they get a few, they're like, oh, I'm going to just chill now. I'm not in save mode anymore. So just keep saving as if you don't have any properties, and then don't spend any money on anything other than real estate that you make off of real estate.
That sounds like sound advice too. The income from the real estate, use that to buy more real estate instead of starting to live off it so easily. One of the things that I share with business owners all the time is how they take money outside of their business to try to quote unquote diversify. This is the same, but even worse, because you're spending it on other stuff. You're not even diversifying. So let that roll in and keep snowballing for you. The 20 markets that your teams are in, what are some of those markets, and why did you guys pick those markets?
So we try to stick to true, mature vacation rental markets where most of the real estate that's ever been done in those markets has been second homes and vacation rentals. But so we're in 20. We're in the Smoky Mountains in Tennessee, pretty much the entire Florida Gulf Coast. So all the way from the Panhandle, Gulf Shores, Alabama, which is right on the Florida line, to
Yep.
Destin, 30A, Panama City Beach, Fort Walton, and then all the way down the corner of Florida down to the Sarasota Clearwater area. So Orlando, Blue Ridge, Georgia, the North Carolina side of the Smoky Mountains, which are experiencing a lot of hardship right now with the floods from Hurricane Helene. We've got the entire North Carolina coast, so Outer Banks, Carolina Beach area, Myrtle Beach, South Carolina, quite a bit in Texas, so Texas Hill Country, Galveston, Crystal Beach area, Scottsdale, Arizona, Broken Bow, Oklahoma, Branson, Missouri, Shenandoah, Virginia, and the Cascade Mountains in Washington. And we're also adding new markets. We'll probably add a few this year as well.
Very nice. What are some of the things that you see coming in this entire space in the next 6 to 12 months? What are you looking at?
Well, I think just the real estate market recovering as a whole. So a lot of people don't realize that 2023 and 2024 are the worst recorded time in the history of real estate. I'm talking about the real estate sales market, not investing. Worse than 2008. Fewer homes were sold in 2023 and 24 than the entire, all the years in the Great Recession, because of the interest rates almost tripled within 6 months. So things are getting a little bit better there. They're starting to kind of tick back up very slowly. So just looking for the real estate market to get back to some level of normalcy in the next 6 to 12 months. But the opportunity for you as an investor is the real estate market sucks right now. So you have no competition as a buyer coming in to try and get good deals. And there's a lot of listings sitting on the market, expiring. So now's a really good time to get good deals.
Yeah, I was going to ask you about that too, because mortgage rates are back up around 7%.
Mm-hmm.
So at the time of recording right now, and then obviously there's a ton of listings sitting. So people with cash puts them in a nice provides a nice opportunity if you have some cash available. And of course, then there might be people that, because of the hurricanes and so forth that came through in the storms, they want to relocate and they want to sell their properties, right? So you got a lot of dynamics, and especially on the East Coast, based on recent events, that's influencing real estate markets.
Oh, yeah. And I mean, really, the biggest one is just interest rates. I think once we get through this election, for some reason, everybody is like, oh, I want to wait until after the election before I buy anything. And at the end of the day, it's like, what are you going to do if one person is elected or the other person is elected? We are all going to wake up the next morning and keep living our lives just like we did the last election and the election before that. So this whole, I'm waiting to see, what are you waiting to see for the world to explode on November 8th? It's not, nothing is going to happen overnight. So I don't think that should be a thing that's keeping rates up, but I think that's why rates are sticking higher the past couple of weeks, because I think the whole real estate market is kind of waiting and seeing. For what? I'm not exactly sure, because it's not going to change hands next week. But anyway, I am not a political scientist.
No, the 10-year treasury, what's been interesting is the 10-year treasury has been going up even with the rate cuts. So to your point, the Fed determines the interest rates. So they're gonna decide. And what was interesting is that they did cut, but even with the cut, that rates keep going up. So it's going to be interesting to see how it plays out, because, as you mentioned, interest rates are the main driver, especially in the real estate, because most of your properties are financed, right?
Right.
Yeah. And then other trends that you see in the space that people might be aware of. You've mentioned some technology, which it's been pretty incredible to see within 5 years what's going on in the short-term rental space with all the technology that was all of a sudden rolled out, right? Any other trends that you can share in short-term rentals?
So I think as time goes on, the real estate and true vacation markets is only going to be more valuable, because, as you probably, anybody who's listening to this has read at some point, metro markets where there's a lot of primary homeowners, a lot of industry outside of tourism continue to outlaw and ban and restrict short-term rentals. And I get it, people are trying to live their lives in these markets, and those markets are not dependent on the tourism industry. So nobody wants to have, like, Nashville, for example. I used to live in Nashville, bachelorette party capital of the world. And I would have been pissed if I'm trying to raise my kids in a house and next door an Airbnb opens up that's bachelorette party central. We've got penis balloons everywhere and I'm having to cover my kids' eyes. I totally get that. So I think that as that continues more and more in metro markets, that the tourism dependent vacation markets, where they're dependent on the local economies are dependent on tourists coming and staying in the vacation rentals, I think that's just going to be more valuable real estate to have as time goes on.
Great. Avery, can you share a little bit about your company and all of the things that you're involved with and that you do?
Yeah. So you can check us out at theshorttermshop.com. And we are a real estate agency. We've got agents in 20 of the top vacation rental markets. And so what we do is we help you choose the best market for you and the ones that we operate in. Help you choose the best property. And then we have what we call our Management Monday course that is free to our real estate clients. And we teach you everything you need to know about how to set up your listing, how to use the different property management softwares that you'll need, basically everything you need to know to get up and running. We teach you that while you're under contract. So by the time closing date rolls around, you already know what you're doing. You're ready to just hit that go live button and be up and running on your property, rather than closing. Okay, I just closed a $500,000 property. Now what do I do? We make sure that you are ready to go before closing and hopefully make you so successful that you come back and buy more real estate with us in more markets.
Fantastic. So this has been a blast having you on. Thank you so much for sharing your insights and your knowledge and providing so much value to all of my listeners and my viewers.
Thank you so much for having me. Happy to do it.
And thank you to all of my listeners and my viewers for, again, spending your most valuable resource, your time, with me on the show. Everything Cashflow Ninja is at cashflowninja.com. We've got over 1,000 podcasts, 4 books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. Until next time, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.